Hey everybody, this is Phat. I thought I'd take this weekend while we're in a little bit of a news-driven event, and looking at setups necessarily is not a great thing right now until we get the U.S.-China tariff issues resolved. Just kind of see what's happening. You can see how Qubit finished right here, and I just go through what my indicators are on my chart, just for any new followers in the Stock Talk Insiders Discord or anybody that follows me on Twitter or sees my YouTube videos I put out with the low volume setups. You might want to know, what all these things are. And what I'll do is I'll post a PDF link as well with each one of these so that you can just click on them and get to them if you want to use them on your charts as well, or just take a look at them or know what I'm doing when you're listening to me. So starting off, we'll look at Qubit here, QUBT. It's a quantum play. And we'll go through each one of these indicators that you see on here. The first one, this white line, for example, is just one that I had added. That's an anchored VWAP, but don't need that. This right here, these are the David Ryan ants. And you can see right here when it's green, the momentum, volume, and price requirements are met. It's a very strong indicator, shows institutional accumulation, which is the basis of what I do for trading. And I look for low volume pullbacks. And you can see right here, we had a low volume pullback after institutional accumulation. And it came down into this earnings VWAP, which is another one of my indicators right here, this blue line. I just color it blue. High school I went to was blue and gold, so that's why I put it in blue. Earnings VWAP are another basis of every one of my swing trades. I look for a rising earnings VWAP, and there it is right there. Price could have been a little tighter for me to get involved right here, but you see the basic idea. This is the 50 EMA, this sort of lime green color. This is a 50 EMA. I like the EMA. You can read up a lot on statistics and research, and some people guarantee you that the SMA is better. I prefer the 50 EMA. That's just what I use. So 50 EMA, earnings VWAP, David Ryan ants. And then this right here is off of this cup with handle. Well, actually a cup. I would call this a handle, but it doesn't bring it up on the indicator. But this is similar to the IBD WAN cup with handle or flag, and that's why I'm using Qubit. So you can see a couple of examples here. Here's a flag that is registering, and again, I'll put the guy that designed this indicator in the PDF for you. So I'm not going to go through and name all of them right now, but this is a cup with handle and a flag. You can see it makes that 100% move, or over 80%, and then it gets qualified as a flag move. So that's another indicator that I use. This is why I was able to give up IBD, because of this indicator right here. I got tired of searching and making them on my own, and I finally was able to give up IBD so that I could use Tradingview full time, because I like it for my intraday entry and exit on trades. I prefer, because I work off of my phone. And this is the 5% buy zone off of that pivot handle that gets drawn up in there too. So when you see this blue area right here, if you go in and measure it, it will be 5%. So there's your 5% buy zone, again, going off the William O'Neill type theory. And then here is your 20% profit taking zone. And you can see it got right there. And we had a couple of things. We had a key level around 25, which is a key level, Livermore type of level, which I have identified as well right here on this blue dash line. That's just a little indicator that I made for myself. I'll put that on there too. I'll make it free. So $20, $25, $30. It will put those lines on there when price gets within an X percent. I forget what percent I labeled it at, but you can see the $10 showing right here. So those even numbers, in other words, those round numbers that are so often in trading, key levels. The more you get into reading about Livermore levels and key levels, you'll learn that 25 is a really big one with the smaller cap plays, the mid caps that push above 25. And then come back and retest, and holding 25 is a big character change for IPOs and other stocks that move above $25. So that was our excuse me, lost my train of thought there. Cup with handles, and it also does double bottoms and flags. So that was our structure. That's what I was trying to say, structure indicator. And we went over the Livermore level. Okay, and then mini coil. That's why I like this chart, because it's got pretty much all of it in there. So mini coil, I learned this from TA Plot, but again, that'll all be in the indicator list that I put for you on a PDF. So you have the candle here, and then the second day, and then the third day. And once second and third day are within the top and bottom. Let me zoom that in real good for you. Within the top and bottom, so the high and the low for the day, not the closes, the high and the low for the day. This inside bar right here, and that's why this candle is white. That's another indicator. I'll mention that now as well. So inside bar, they turned white. I'll put that one again on the PDF. And then the third candle, all two of these candles, both of these candles are within this high and low of this candle, and that creates what we call a mini coil. And I look for those mini coils right off the 1020 EMA, which is right here. This is another indicator, 1020 EMA, which I have my own. I'll put that on the PDF as well. This 1020 cloud, I learned that from, I forgot his name, just about to name drop somebody. That's why I'll put it on the PDF. But I created this one myself because I got tired of, on his, you got to go back and change a bunch of things just to get down to one. So I just wanted one, so I created just a 1020 cloud. And it also shows on the intraday level, it'll show you the daily on the intraday. I'll put that on the PDF as well. But this is a 1020 cloud, and you can see I like to see these coils form off this 1020 cloud, which it does right here. And it fails, but in general, these are the ones that I look for to break out. And what else do we have here? So upside reversals, learned this from Rye from Deepview, and before that, Trader Lion. So these upside reversals, and I have an indicator. I'll put that on the PDF as well. That is straight from Trader Lion. It's a free indicator. All these are free on here. None of these are paid. Down below in the lower time frame, I have, this is relative strength. This one's from TA Plot, just relative strength, multi-high look back. You can set it to 3 months or whatever months back you want it to look back. Mine's on 3. And then this is also from TA Plot. I learned a lot from him about low volume pullbacks, and this is accumulation volume basically when you see it in green, and distribution volume when you see it in red. And what I generally use as a general rule of thumb, if we have more than 3 distribution days within 10, that's a warning sign. So if you look right here, we had 1, 2, 3, 4 within 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And you know, you can argue that that's not what happened, that it was a news-driven event. I'm just telling you, more times than not, when I observe them with 3 distribution days within 10 days, it's not a healthy sign. I'll leave it at that. So that is almost all of them. We have down here, this is the 30-week moving average. So I keep the 30-week on there. And because I'm looking for stocks, if you look at, like, say, Netflix, go ahead and flip to another one. Netflix is one that tends to, you know, stocks have a character, as they say. And Netflix tends to pull into that 30-week and pull away. And that was just this week, right? And you go back through it, 30-week, pull away, 30-week, pull away. So that's why I keep, there's a good double bottom look for you. So we have a base off of that structure that I was telling you about earlier. We have a base, we have a double bottom that forms, and it shows it for you. And here we are again in a big, large base. We're at the bottom of a base. You could argue, you know, double bottom right here. Didn't really get a lot of distribution volume, but when you add up these right here, these clearly look like distribution as there's gap downs. Usually look for big, large candles, but in this case, it was gapping down 2 days in a row, and so that would appear to be distribution volume right there, and sort of a flush, if you will, for this bottom right there. Some also would call that maybe a Wyckoff springish type move right there. Let me get rid of that for you. So we also had, you can see right there was where I had the line drawn. I've been tracking Netflix for a while. Clean this up for you and then show you. So right here, oh, let me put my magnet on. Double bottom right there. And it's kind of Wyckoff springish, and then you had that 30-week right there as well. And then the last indicator I believe on here I have is the 200 meter dash, the 200 SMA. And I use the 200 SMA instead of the EMA like I do on the 50 because this one is more traditional and probably the line most looked at by anyone in trading of large size. Many people just make a living buying off the 200-day simple moving average. And you can see down in here where that's a pretty good thing to do when something moves above it right there. So those are longer term traders, they'll do that, and that's definitely an option. You can see I've been playing Netflix for many years now. But There we go. So that is all the indicators on the daily. Now let's move down to the intraday chart. And the gaps are very important to me in my swing trading. And so the first one I'm going to show you, a lot of people I don't think understand, I don't say I don't understand how important gaps are, but you can just look at a chart of SPX, for example, and just looking at the actual close and the actual open, we can find some gaps in here. When you see them blue, that means we went up, and so these were gaps up. And you can see right there, they're very healthy indicators. And when you lose those gap ups with a close below them, they're very good indicators that it's not a good situation. And the amount of time that something takes to recover the gap, I learned that from Walter Deemer, shows the strength of it. So when we opened lower here and immediately recovered it early in the day, that was a very healthy sign of continuation. Here you can see, before lunch, we lose right at about 11 o'clock, we lose that gap, and that's a negative sign. And it takes a little while to consolidate. And then here you can see my 5-day moving average, which is a simple moving average. And when it turns purple, and you can change the color to whatever you want, it means it's in an uptrend. I use purple because I'm from Louisiana, go Tigers. And so it's purple, it's in an uptrend. And when it's red, it's in a downtrend. I changed it to a cross because it's just easier. I'm 52 years old, and it's easier on my old man eyes. Here you can see the intraday 1020 cloud. When it's green, it's in an uptrend. Both EMA, the 10 EMA is moving up, the 20 EMA is moving up. And when it's pink or red, you can see it's in a downtrend. That's my intraday 1020 cloud. Like I said, I'll put all that on PDF for you. And then here is my 1020 daily on my intraday chart that I made. And I'll put that on there as well for you. So that, along with and this is the daily 50 EMA. So I made the same thing. This is a daily 50 EMA. You can do that on Tradingview yourself. You just daily 50 EMA on the intraday time frame. And that is it, I think, on the intraday. Nobody likes this one, but I always put these gap downs. So I put these on here, these yellow backgrounds, to tell me something is gap downs, because so often gap downs in stocks, I'm usually going after stocks that are in pretty strong uptrends, right? They're above the 1020 cloud, they're above the 50, they're above the 200, they're all rising, and they're pulling back into the 10. Sometimes they're just pulling back into the 5. Similar example right here. So they're moving strong. It's above the 1020 cloud, it's above the 5-day, 50-day, and of course it's above the 200. All three are rising right now. So this is a little bit of a pullback, but it's all for this rising 1020 cloud, and certainly a rising 50-day. And it pulls back into a rising 5-day right here. And so I want to know when they gap down. It just helps me to see them. It's why I changed the entire background. So it's a little gap down off the close. Here it is right here, a little gap down off the close. And when they're hot moving like that, they more times than not will recover that gap down. And that's why I have them on there. Also, I made that because this one only goes back so many bars as far as that gap down. All right, and then of course, that's it. We'll go ahead and leave it at that. Oh, and then still, of course, I got the volume down there, but that's self-explanatory. I just keep the same daily type volume, but I do it on the intraday volume. Let's go ahead and talk about low volume pullbacks while we're here. Let's find one on Netflix. So here's a low volume pullback on Netflix, just to give you a good example. So we have healthy volume behind it. We don't have 3 of 10 days distribution volume like I talked about earlier. We have 2 days, so there is some distribution in there, but this is very healthy up volume. We don't know any of the other history on it though. Right now we're just looking at it purely as a chart, so there could have been some news in here, but we have this pullback. We'd like to see them be symmetrical, meaning the volume and price are basically in congruence, but they're not right here. I mean, this is a bit of a gap down, right? But it pushed back up during the day, finished on probably strong volume. We'll go down inside and look at it. Let's move this to right there so that we'll be able to find it. Let's clean this up so we can get rid of all that information. Too much data. You can see I was tracking it right there. And so we have a clear identified upside reversal. We talked about those earlier with the indicator from Trader Line. And you see the price moving above it. Well, how do we know when to buy that? And a lot of people have different ways of doing it. Here's how I do it. I go down intraday. Let's find that low volume pullback to the 20 EMAs, classic spot, right? So there's a 20 EMA test after the breakout or a Sam Weinstein stage 2 move, that type of thing. Definitely a strong move up, right? And now we have we're looking, and you get into all that sort of stuff. Like we're looking for a lot of what I do, I'm looking for stocks that have moved 30%, and then now they've pulled back. That's kind of a key analysis type move, kind of IBD type theory. But here's the pullback, and it was on a gap down. Definitely, not good. I will say the volume was light throughout the day. If you look down there at the bottom, volume was light, and we had a very strong close. Look at that volume right here and here. I mean, that is strong volume on the close. So how would I know to buy it? I buy. Generally, I want to see a rising 5-day, and in this case, we don't have it, but that's okay. It's somewhat flat, and nothing wrong with that. It's a rising and then flattens out. It's not a dip. You don't want to see a downturned 5-day moving average, something like this, where it's turned down. It's clearly turned down. It's not flat. This is not flat. This is turned down. So I'm not playing this one. And you can say, well, you missed this move. Yeah, that's okay. I'm looking for a flatter move, something like this, right here. And when you see the entry is right here through that high of the day on above average volume. And that's clearly down here is above average volume, 2 candles in a row. You love to see 3. When you get 3 above average volumes, I'm on a 12-minute time frame, but if you get on like a 15-minute time frame and you get 3 periods of above average volume with price rising or holding, that's usually a very good sign. So in this case, it's a pretty healthy sign. So you buy it through that high of the day. I wait till the candle closes, so I buy right around there, about 9:45. I'll buy that stock through the high of the day. And then sometimes I'm wrong, and because of this 5-day is red, you can see where it bounces right off of it, which is classic, and I probably would have waited, honestly. I'd have said, okay, well, I'm not going to buy it because it is a little bit downtrend, maybe. It's definitely flat, and it's definitely underneath it, and I like to be above the rising 5-day when I buy. But in this case, I'll wait, and I can buy it off of the 5-day or the intraday, and I'm not sure why my intraday is not shown right here. That's one more indicator I do have on there, is the intraday anchored VWAP from the first candle. And I will buy it either off of this VWAP right here or off the 1020 cloud when I see volume dry up and then price come in on rising volume. So this is more the area right there where you see the volume increasing and the price going up that you would look to buy Netflix right there. Oh, this is SPX, excuse me. SPX right there. Let's go back to Netflix. How I got on SPX. All right, let's use this mini coil as another example. All works the same whether I said SPX or Netflix, we're all good. So we'll go down here to this coil. Let me get rid of this line right here. All right, so here's a mini coil, and what I'll tell you is this again isn't necessarily where I would buy it. I'm just giving you some examples. So it is a coil though, and it is off of the 30-week moving average. So that would definitely be a spot that you say, well, Phat, you said earlier Netflix likes to bounce off the 30-week. Well, there you go. Then there's your coil to work off of. And coils actually will form when they gap down. The coil level is actually right there at 1,171. So don't let that fool you. But you can say this is an inside bar. And so through that main bar or mother bar or through this high of the day, I would buy it. And that is fair. Basically, in the end, what we have is consolidation right here. Regardless of how you want to look at it, this area is a consolidation right off the 30-week moving average. And you say, well, why would you buy that one? If it gaps up, how would you buy it? For me, and it's just everybody's own style, what I would do on that gap up, I'd have my intraday anchored VWAP on there and my 1020 cloud. As you can see, it's going to gap up. I'm going to be a little nervous to buy it. I'm going to think it's left me. It hits the earnings VWAP. It hits the 50 EMA and bounces back. And then now the volume dries up. Now price comes in. There's your buy right there on volume. See the volume, see the price. There's your buy point. Takes a little patience, but there's your buy point right there. Now you have to decide, are you going to hold overnight on large size? Probably not for me. I will use lighter size. And then the next morning you come in and it busts through on heavy volume. 4 candles in a row. We had 4 volume bars above average, price rising. Let it pull back again to the 1020 cloud and the intraday VWAP. There it is right there. There's your volume drop. There's your price comes in on increasing volume. And again, it repeats over and over and over again. So that's how I look to buy on the increased volume, above average volume on price through the prior high of the day on upside reversals and mini coils, or for that matter, relative measured volatility at 0. I play them pretty tight. I will play them 5 or less, but I like to see them down below 0. All right, let's move on to our process. And part of the process that we do, the first thing I'll do is I'll go back through and I won't do that today, of course, because it's a Sunday actually, but you go through each one that you had on your low setups list. Usually I have between 5 and 20 maybe, and see how they perform, see if the market's doing what you think it's going to do when those prices move through on volume. Any buys that I had, I really go in, where did I buy it? Did I buy it early? Did I get nervous? Did I wait for it to pull back to the anchored VWAP or the 1020 cloud intraday, or did I buy it off of the intraday VWAP? So, or did I buy it off the 5-day as we move through it? And the reason why I wait again for the pullback to the intraday VWAP or the 1020 cloud is because it's moved so high above the 5-day. But we'll go to that, and I'll go ahead and end this one just so this is just our setups and how we play them. In the next video, I'll show you part 2, how I go through my process to find them. Thank you.